Hey everyone, today I'm going to be talking about my trading model and how I trade. I'm going to show you this in under 10 minutes, so let's get right into it. The main goal of my trading, the whole point, is to get in trending moves and stay in trending moves. Now, I would be classified as a reversal trader because my approach has me looking to enter a trending move early in its formation, shortly after the reversal. But I want to be very clear that the main goal is to participate in a trending move, not to catch the very top or the very bottom. And so, referring to trending moves, what starts a trending move? How does that begin? The answer is a reversal structure. You can see that sketched out here in orange. When we have an uptrend, we're making higher highs, higher lows, higher highs, higher lows. How does that change? How do we change from an uptrend to a downtrend? Well, price would need to reverse, usually aggressively, to break the trend impulsively down, breaking the most recent higher low, and follow that up with a lower high. Now, at this point, we would have price shifted from an uptrend to a new downtrend. And this is what I refer to as a reversal structure. For me, the qualification is that the move that breaks trend needs to be aggressive, impulsive, really show sellers stepping in rather than a passive corrective pullback. Now, after the reversal structure, then I get the actionable leg, the hunting leg. The leg that follows is where I look to participate. That's where I'm looking to take my entry, and I'm looking for an entry trigger. So, what is an entry trigger? This varies from trader to trader, but essentially what I'm looking for is something that tells me to press the button now. It tells me to get in now, and it defines my risk, refines my risk down to just one or two candles, depending on the approach that I'm using. You can see on the left here, here's an example of a strat style candle trigger. Again, the risk here would just be one candle. I'd be entering on the break of this candle here, stops at the low. This would be essentially a 2-2 resumption. Over here on the right is an example of a fair value gap, the blank space in this 3 candle pattern, 1, 2, and 3, where there are no wicks. It's all body in there, that middle candle. And so once that is retested, this would be a limit order right here. And that would be my entry, stop at the low over here. And again, to clarify, this is all occurring within this blue hunting leg. I'm only looking for entry triggers within this blue hunting leg. That is where I'm looking to do business. So where am I looking for these reversal models to occur? Obviously, reversals occur all over the place. So I'm very specific about where I look and where I look to participate. And the answer is going to be after a corrective retrace. Now, in wave theory, we can categorize moves by impulsive action or corrective action. Essentially, impulsive moves are aggressive trending moves, authentic trend, where buyers or sellers are in firm control of the situation. Corrective moves are passive, they're weak, they're overlapping. And when we see a corrective retrace, such as the one sketched out here, I'm looking for a reversal back through that correction, back through the origin of that correction and beyond as the authentic trend removes. There's going to be a lot of weak positions in here, weak participants in here that are going to get forced out of their position as the trending move begins. And so after a corrective retrace, that is where I'm looking for this reversal model to occur. And you might have recognized at the very beginning, there was a box here that said AOI, area of interest. And that's what I'm referring to here. I'm looking for this as an area of interest. It's not necessarily that price will reverse there or price has to reverse there. No, it's an area where I'm interested in a reversal. I'm watching for a reversal to occur based on the corrective structure and based on the overall context. Another structure I look for a lot is the flat correction. And essentially a flat correction is a corrective pullback, which marks the A wave. But instead of resuming impulsively higher, instead of resuming this authentic uptrend, price rallies correctively, overlapping, weak, passive. It floats higher and usually fails at or near the prior high. And when we see this reversal occur at or near that prior high, I'm looking for price to trade back through the other side. So this would be the B wave. I'd get my reversal model, my hunting leg trigger, whatever, and look to trade through this range back to the other side. And when we get to the other side, again, I have another opportunity, looking for price to resume higher, resume the original trend back to the upside. As an example here, let's take a look at Palantir back in June. This is an example of one of those flat corrections where in an overall uptrend, price comes back with a corrective pullback and then rallies back through the high. However, notice the type of action in this rally here, kind of outlined in orange. It's sideways, it's messy, it's overlapping. This is not authentic trending action. This is not sustained control by the buyers. This is not a driving forceful trend. This is corrective action. And so when price then gets up here, sweeps the highs, and fails, the flat is essentially confirmed. And so in that situation, my attention turns to the other side of the range, looking for price to sweep this liquidity and reverse back through the other side. And so this is where I'm looking for buyers to step back in and reverse price. And let's see how this played out. Okay, so very quickly here, we get the sweep, we get the reversal. And notice we have the downtrend here, right? We have the lower high formed right here. Sweep the low and reverse. And then here we get the lower high forming. And so where exactly higher low, where exactly this higher low forms is not extremely significant. Okay, so whether it's here, maybe it's a little deeper, kind of just depends on the situation. The point is the next leg that follows will be actionable. That will be the hunting leg. That's where I will be looking for an entry trigger to occur. And so if we continue here, we get a nice spike up, nice thick candles here, and it leaves behind a fair value gap on the 30-minute time frame. And so this fair value gap is actionable for me. I place orders here, right on the top of this fair value gap. Stops where the fair value gap originated. It's a 3 candle pattern. So this is 1, 2, and 3. The middle one being the fair value gap, where there are no wicks covering it up on either side. So there's no wicks above here on the left, no wicks below here on the right. And so this area in blue is the fair value gap, looking for price to test it and continue higher. So place orders, let the trade work out, and let's see how things resolved. So as we can see, price tested the fair value gap, rallied back through the prior high, achieving the objective. At this point, profit was taken, runners were left to trail with the existing trend. Now notice the risk to reward ratio here. This is one thing a little bit unique about my trading compared to most. I prefer a little bit of a lopsided reward to risk ratio. This is over 5R of reward for every one R of risk put at risk. And my preference is to take higher value wins at a lower win rate rather than stacking up a ton of very, very small wins. So overall, this illustrates all 3 steps. Had the thesis, the area of interest, looking for price to come into this area, sweep and find a reversal. That's step 1. We did indeed get that reversal structure, as you can see here in orange, breaking the most recent lower high, forming a higher low, and then getting an entry trigger within the hunting leg. Price continued through the target and managed accordingly. So in summary, here's a flow chart of my overall approach to trading. I'm beginning with the question of what is the context? Where is my area of interest? Where am I looking to get involved? I'm asking then, has my model been activated? Do I have a reversal structure with a higher low or a lower high? Do I have a hunting leg forming? If so, I can keep moving forward. Do I have an entry trigger? If yes, I execute, manage the trade and move on. If not, then I have to wait. If I don't have a reversal structure, let's say price hits my area of interest and doesn't react, doesn't give me a reversal at all, well, then I have no opportunity at the moment. I now ask, has my thesis been invalidated? If so, then I need a new idea. I don't mind reevaluating my thesis because I've had no trade here. I've had no opportunity and no loss taken. So I simply have to find a new area of interest. If the thesis is still intact, but I haven't had a reaction yet, then I simply wait. And so it's very mechanical, it's very repetitive. The only subjective step here is the context, it's where's the area of interest. But again, that is based on a set of tools that I use in the same way each time. I'm looking for very similar situations in all of my trades. And so if we go back to the beginning here, okay, my whole process is identify an area of interest, identify an area where I'm looking for price to either resume trend or reverse trend, looking for a reversal structure to activate that, and entering on the next entry trigger within the hunting leg. And from there, I'm trying to stay involved with trend until the objectives are met. With that, I hope the video helped. Thank you for watching. Have a good one.